Greetings tax tip lovers and welcome to this week's top 5 tax fixes in just 5 minutes. Come gather round people to consider the government's urgent review of CGT by the Office of Tax Simplification and how it might affect property owners and landlords. The brief is to simplify CGT and includes a review of rules which distort people's behaviour and do not support government policy intent. That's thinly veiled code for find ways to reduce tax planning options, and it is going to affect landlords and property investors. I think we all know the Chancellor has fired the starting pistol for a tax grab ahead of the autumn budget. So what to do, property tax tippers? Property owners are sitting ducks with assets you likely need to sweat to make your business work, and CGT will always be of significance to property owners. Well, you better start swimming or you'll sink like a stone, for the times they are a-changing. Okay, here we go. Let's rearrange the leopard spots on the top 5 CGT review considerations. Static this week's number 5 is keep your eyes wide. CGT is generously low at just 20% for higher and additional rate taxpayers who would pay 40 to 45% on their income. And maybe the Treasury will decide to align and harmonise CGT rates and income tax rates. Now remember, tax tippers, individuals pay CGT, companies do not. And if you move assets into a company, then under current rules, capital gains on those assets are essentially wiped out through an uplift in base costs. So hit pause, go back, play that again, and think what it could mean to you. Down at this week's number 4 is, for he who gets hurt will be he who has stalled. That's called incorporation relief, and it's currently available to businesses to allow them to restructure, but who knows whether it will continue. Maybe incorporation relief will only be given to trading businesses rather than investment businesses, which benefit most with large amounts of fixed assets on their books. So consider incorporation and take professional advice. And I'll tell you how to do that in less than 3 minutes, tax tippers. Just inside this week's top 3 is a classic called The Chance Won't Come Again. Okay, here's a quick refresher on incorporation relief. If you sell property, you pay CGT on any profit, and the same applies if you sell your property to your company as part of the incorporation process. But since 1992, the government has allowed incorporation relief. So, one more time, if you move property assets into a company, capital gains on those assets are essentially wiped out through an uplift in base costs. The key is the beneficial ownership of the business remains the same. It's still owned by those who now become shareholders and directors, and incorporation relief exists to allow people to move into a more robust long-term structure without tax penalties. A new entry at this week's number 2 is your old road is rapidly aging. Companies pay tax on capital gains at corporation tax rates of just 19%, a lower rate than is paid by individuals. The CGT rate for residential property is 28%, so for property investors, there's a clear advantage in a company. If you need more reasons for incorporation, take a look at another of my 5-minute videos called How to Own Property, and you'll find it in the video vault. Just 2 of those reasons are Section 24 benefits and the fact that right now, going from personal ownership to incorporation will likely cost significantly less in SDLT under temporary rules recently introduced by the Chancellor. Staying at number 1 is the all-time classic, for the times they are a-changin'. The review will be implemented in the autumn budget in October. Normally, the Treasury gives taxpayers time between announcing policy and bringing it into force, typically the start of the next tax year. But we live in unprecedented times, so anything is possible, tax tippers. So if you're considering incorporation, then vacillate no more. If there may be benefits to a limited company structure, then examine your options right now, because there's never likely going to be a better time to do this. Once it's done, probably. In theory, the review won't be retrospective, but that's convention, not rule of law, as anyone affected by the loan charge will tell you. Okay, tax tippers, that's it. And as Bob Dylan wrote, as the present now will later be past, the order is rapidly fading, and the first one now will later be last, for the times they are a-changin'. So it's time to take action, and here's how. You can do nothing and stay in the exact same place and pay a shed load of tax unnecessarily, or you can follow the link above for a free Power Hour review with property tax experts who are ex-PwC and ex-HMRC, and will make your property tax planning like it was our own. And that's all from our crystal ball of the Treasury's CGT review and how you might be better off incorporating your property business, tax tippers. All right, stay bright. Catch you again for breakfast next Sunday. Ta-ra!